Good morning, everyone. Happy Monday. This is the London session on TopstepTV. Now, if you've just randomly stumbled onto this video, my name is Deeyana Angelo. I'm part of TopstepTV crew, and I'm based in London, UK. So we're going to be looking at the weekly outlook of what we might have this week, even though it could be a bit of a quieter week because the time of the year, we are coming into the end of August, which traditionally means that a lot of people in Europe will be away on vacations, holidays, and that could mean markets staying in balance and not really doing all that much. And of course, we've had a bit of an August that was an outlier, so we've had quite a lot of action. I'm going to start with analysis of crude oil. So I'm going to pull up a weekly chart here. And if I notice where we are just in a general chart location, we're pretty much middle of nowhere of the weekly chart, right? We have some demand areas that are located sort of lower down here. That is around 73 roughly. And then we have some major supplies all the way up at 84.70. And then another little offspring supply at 82. So why do I say offspring? Because it's sort of coming from an already reactive area of a base drop. But this was the originating point. However, this one is also potentially of interest if we're going to stay in balance. So all of that means that we have to be a little bit careful with our trade locations in this particular area until we reach some sort of better overall large time frame areas, right? Now on the right hand side, I do have the volume profile just for this entire range. And even on there, you can see that we're now in an area of a lot of volume. Now, whenever you're in a high volume node, it typically means that you might spend quite a bit of time there before they break out to reach the areas of lower volumes where the price didn't spend much time. And really, those are the areas that are supply and demand, right? So that's what they represent. So you can even see the same information on the volume profile as well. So for now, I will have to default down to some more immediate time frames to see whether we do have any sort of trades going on. This is a daily chart. This is a new crude oil contract. We are in October. And if you're on Topstep, that would have rolled automatically to October. So there's nothing else to do there. And daily chart, similarly, we have some, again, demand areas lower down at 73.88. And then higher up at 78.54 for some more immediate chart location. 4 hours. So let's see what the overnight did. I mean, not that much, really. Still contained in the range from Friday. So again, nothing to see there. Let's have a look at the 30-minute chart. Now, a 30-minute chart does have a bit of a failed auction happening here. It is also opening inside the value from Friday. I'm using the London shortened value for that calculation. So we popped below the initial balance and then kind of went into a failed auction. The size of the initial balance is not bad. It's already 55 ticks, which could mean that we might have a bit more of an outlier day, because usually crude oil will not move 55 ticks during the first hour of London. Usually it's about like 18, 20 maybe. Now, if I take that average movement of how much we move in the first sort of couple of hours, that number is closer to about 31 ticks. So if I take in, let's say, from the London Open and then the movement all the way up to about, let's say, 10:30 my time, London, we would expect an average movement of about 30 ticks, right? So we're obviously overshooting that. But there is another piece of statistical information that we can take advantage of, is that London is technically an out-of-hour session for crude oil, and it will do a double initial balance break on almost like 70% of the days if we're looking at the last sort of 3-month sample size. So I'm not really that keen to kind of just plow in a short this area, especially going against the initial balance. So I want to leave this alone to see exactly what they do with it. And then if we end up in a neutral day, perhaps we can look to position ourselves in a short. And then if it rotates all the way back down, maybe there are some kind of range-bound day longs. It's a sort of a similar thing that Dolby does by looking at a range, but we're using the initial balance and some extensions that we might have at the time to come up with the same sort of a strategy where you're effectively looking to fade the edges of whatever range we have established. So that is my plan for London, given that we are inside balance, or they were imbalance inside value. Now, if we start to break away from this balance, that'll be, new market generated information that we can take advantage of. But for now, I'm not too crazy about initiating any trades, especially given that it's so early in the day and it is not a great idea to just go in guns a-blazing on a Monday morning and immediately start digging holes. So one thing that I look for whenever I'm doing analysis in the morning is to get an understanding of what is going on and what the highest probabilities of this particular product can, maybe bring me some areas that will have a higher probability of working out. And for now, crude oil is, it's got potential, because, there's an obvious balance here. But for now, I don't quite have a good chart location for a good trade. All right, so let's move on to, maybe let's have a look at what's going on in gold. Because gold has been, it's been moving in a decent range, but it's been a little bit tricky for me. So gold. And that's GC. Okay. Same thing. So I'm going to go up to the weekly chart first. All right. So weekly chart looks pretty bullish. And I'm also interested to see what's going on the monthly chart too. Okay. So very, very bullish gold. We are at all-time highs. Weekly chart creating, even more buying wicks. Daily chart, very similar. So if I increase this, So there's a buying wick here on the daily chart. These are brand new areas, so we have no reference points on large time frames for further upside. So it's uncharted territory, and that can get a little bit tricky. So let's have a look at the 4 hours. Four-hour chart popped a little bit above the Tokyo range, but just a little, enough to create a a little higher high here. But yeah, it's uncharted territory here because we don't have any levels, so that means we have to use immediate immediate areas and session ranges to see whether we can get some sort of an orientation point, right? So you can always find an orientation point by looking at previous sessions. So you can either say, well, we are still in the range from Friday, but we try to pop higher than the Asia high. That will be another bullish signal, right? If we manage to stay above the Asia range, that will be bullish. If we continue to distribute in this area and we cannot go higher, that will be a bearish signal. But as far as large time frame areas are concerned, all I have is to the downside, effectively. However, it's a bullish market. So this, to me, the way I would approach gold is just to have a look at what is going on the profile itself. And again, any sort of analysis that you do would need to comprise, would need to have market structure in it. So there was a previous high at 25.39, which was already a little bit reactive. So for now, we effectively have a range, right? So we have a range that's roughly around this area. So range from Asia high, 25.45 half, and then down to where we turned around at 25.33.7. So until we break out of that, like that's the range that we play. So you don't look for the market to do something that it hasn't done yet. You literally just take whatever is there and try to position yourself until some better market conditions come in. So let me just change some colors here. All right, there we go. So that's the range that we're working with. That becomes my orientation. Looking at the profiles, like volume profile says that we're in balance, but actually we did open quite a bit above London's value area. Now we are very far away from the London area, literally like 1.5%, which is I would say that would be a reprice rather than any kind of gap that needs to be filled. Because anytime you have gaps that are massive, they never really bring the full, or they very, very rarely bring a full gap fill down to the value area. What is more likely in that situation is that we're going to end up in a bit of a flimsy range-bound day. So again, the stats are telling me the same thing. They're telling me that we're still in balance and that we haven't really made up our minds what to do with these all-time highs here. And that's in a way it's a good thing, right? Because we have a range established rather than some random trend that just keeps going with no references and it just keeps shooting up or falling. But yeah, I wouldn't expect the full gap fill to happen on days like that. And this goes across the board, not just for commodities, not just for equities or bonds. It's across the board, right? Whenever you have a move that has brought the price vastly outside of value, outside of the previous day's range, only if we're sort of in the vicinity, I typically like to have about sort of 0.5% to about maybe 1% or 0.8% distance to value if I'm going to run a gap fill. Anything over that, it's like wishful thinking. You're asking too much out of the market and it's just not really statistically very likely. And we want to work from a point of view where you do have the statistical probabilities on our side in order to get the trades that will work day in, day out. You know, we're intraday traders. We're not, you know, somebody who can hold a position overnight for months and months and, you know, even days and days. So we need to work from the highest probability that might happen today. And for me, gold also very much in range. Even though we're opening with a gap, it's too big. So I would expect this range to hold at least for the London hours. Now, if we look at the Friday's developments, so this was Friday, this pop here, and there was an extension of the initial balance higher. Then we had a partial failed auction, and then we went into another little trend up, and it carried on. So this is unusual for gold to keep going after the market settles officially. When we say the market settles or settlement or anything like that, it means the price that the exchange has basically set its settlement time. Now, settlement time comes from the old open outcry hours, and that was the time when the official open outcry trading would end. And everybody would go home, the market would close, you couldn't place any new trades or anything like that. But these days, the markets stay open past settlement. So you can still open and close trades, but you will notice that the volume drops off intraday massively, usually. Now, sometimes these days we've noticed these moves that do go past settlement. So they just keep going, but they're not something that you will see every day, right? This is an outlier. So we had some news, we had some releases last week, and that's probably the reason why. But yeah, right now, gold is in balance. Nikki Trade says, what does the gap mean that we got on oil last week? Are you talking about maybe the contract change? Like what day specifically are we referencing on crude oil? Are you talking about this gap? This is just the contract change. Let's talk about front month and the fact that commodities roll every single month, usually. So I'm pretty sure this is what you mean, right? What does the gap mean? This is not a real gap, right? This is a new monthly contract. Let me remove some stuff here so you can actually see that. Let's get rid of VWAP and maybe this thing as well. Okay, so the gap that you're seeing on crude oil is due to the contract change. So what does that mean? Well, it means that we rolled from September to October. Now, equities only roll like 4 times a year or something, because they do it in quarterly periods. But something like crude oil, and for that matter, most metals and some of the other commodities, they roll every month. So everybody freaks out completely whenever crude oil is rolling, whenever equities are rolling, because they're like, oh, it's a rollover, oh, it's going to be quiet. And it's like, we have that every single month. Every single month, We have that in gold, we have that in crude oil, we have that in platinum, we have that in a whole bunch of other commodities. It's just normal, right? So you will have one odd week of the year, week of the month, where things might be a little bit odd due to the rollover. So this gap is not a real gap. It's just a gap of rolling into a new contract. So they are tracking it in October, and then every time you get a new contract, the prices of that new contract will be different, and that's normal, right? You have two states of futures markets. One is contango, which is like a normal market, and then you have backwardation, which is a slightly skewed market, and it relates to the difference between the spot price versus futures. So when one is higher, that's one market state. So when futures are lower than the spot price, that's another market state. So those two are called contango and backwardation. And because of that, you will get a difference in the new front month. So when you look at the spot price, it will be different. But the longer the contract carries on, the two prices do actually start to converge, right? So the closer the expiration is, the prices of spot and futures will get closer and closer. And that's perfectly normal, right? That's just how it should be. That's the futures markets. Sometimes we get too sort of locked into the analysis that we maybe forget some of the basics of why futures exist in the first place. Futures that are there for hedgers, like for for producers of products. Let's say you have an oil refinery and they want to, or let's say you have, let's use a simple, more simple examples, a simpler example. More simple? I need more caffeine. Let's use a more simple example. So if you have a farmer, right? He's got a ranch with some cattle, and he wants to maybe protect his downside risk, or protect himself from rising prices, right? What will he do? He will hedge into the futures market. That's why the futures exist. Likewise, you might have some users of the underlying commodities, like let's say a jewelry store. They're not producers of gold, but they're heavy users of gold. And they will also sometimes want to use hedging as a way to limit their risk, right? Because you can lock in the prices. Like let's say COVID, we had this huge fall in futures prices in crude oil. Well, anyone who deals with crude oil, like an airline company, they could have hedged the price down where it was just before they stopped trading, right? And that that would be a great way to do it, because you lock in the price of crude oil at like nothing, like $9 or something, and then you're set, right? So that's what the real use of futures markets is, to allow the producers of the commodities to hedge their risk effectively. And this is why you have different month contracts. You can even do calendar spreads between them. We can't do them on Topstep, but a lot of the the big companies, big firms that do deal with multi-million customers and clients, that's what they do for them. They control risk. Analyze gold. Well, I just did, so hopefully that's pretty good. Where can I find those settlement times for each instrument? That's a very good question. All right, so now we have this thing called the Topstep levels, right? Topstep daily levels. You can actually find these on Financial Juice, but it might be, a little bit labor intensive. However, if you go to Topstep levels and you go into settings, you will see a whole bunch of stuff. Last week's high, yesterday's high. We have Hogs levels, weekly kickoff high. And then we have this thing called settlement, right? Well, you can actually put the settlement on your chart. So just for illustration purposes, I'm going to put it as one big thick line. And then you can see that the settlement from Friday was up at 77, right? Was that right? So that is an area of interest, right? So 77, was that really the settlement? Hold on, let me just check that. That was the settlement from Thursday, I think. We're going to have to check this because I'm not 100% sure. I'm going to have to check this with the team. Because that is settlement maybe from previous week. Wednesday or something. Okay, so we're going to try and work this out. But basically there will be a settlement price. There is a settlement price on the Topstep levels, right? I don't know why it's given like a random price. Maybe they haven't like updated it because these levels have to be updated by JD typically. So those Topstep levels will show up. So right now, let's have a look at settlement on my other charts. Just give me 1 second. Yeah, because JD is still the one who's updating things for us. And then they promptly update those levels. So I'm guessing this settlement price is going to change as soon as they wake up. But settlement. Settlement was about 75.61, I believe, on Friday. That was the official sort of. Sorry, no, 75.48. But you can find that on Financial Juiced as well. So if you go to Financial Juiced, they do print out the settlement times for crude oil and gold. Gold closes earlier, and so does crude oil. So crude oil closes at my time 7:30 p.m., which I believe is is it 7:30, 1:30 p.m. Central. And gold closes 12:30 p.m. Central. But yeah, if you go to Financial Juice to check whether the prices are correct, there will be, at the end of every day, it will be crude oil settles at. So let's have a look. Let's scroll back to 7:30 p.m. Don't have it here, but usually, I don't know why they didn't put it in here, but usually there is why is settlement so hard to find? Like, what the hell? So on my Blatek charts and indicators, we do actually have just the settlement price that you can put in, like time-wise, and that's 7:30 p.m. my time. So that's why I have it on my charts. But yeah, we're gonna have to figure out. So gold hits an all-time high. Yeah, thanks for that. Here we go. Okay, so look at that. Brent crude so it is there. Brent crude futures settle at 79.68. NYMEX natural gas, here we go. NYMEX WTI crude. Just want to make sure you guys see that. Let's move it. So NYMEX WTI crude, September futures settle at 76.65 a barrel, down $1.51, about 2%, 1.93% on the day, right? So that's how it's printed out. So I don't know. 76, yeah, so this is a little bit higher, so 76.93, but oh yeah, no, hold on, of course. So this is actually the new contract, and I believe that was the October contract. So this is where the rollover gets a bit tricky, because they are quoting the September contract. It even says it crude oil September future settle, so that would have been a different number. Yeah, so these numbers on Topstep X are correct, but the settlement number is taken from the previous contract. So that will obviously change today. We're going to have a new settlement price into a new October contract, and then it's going to make a little bit more sense. But for today, that's not going to be that much of interest for me. All right, let's have a look at more questions. How can you get the DOM to show more than just current ask bid? I only have those. That's to do with level 2 data. Okay, so level 2 data is something you have to purchase as an additional add-on from Topstep. However, it's not a Topstep charge, it's actually a CME charge, right? It's from the exchange. That's the price that they quote for level 2 data. Level 2 data means that you get those contract prices availability on the DOM, like you see us who are all on Topstep X, right? So you get, on a lot of the products, you get 100 prices deep, and that's $39 per month. Now, we are halfway through the month, and those sort of charges that are level 2 data charges, they run on a month-to-month basis. So if you buy it now, they're going to charge you again on the first of the month. So usually I like to wait until the first of the month and then sign up for level 2 data, and then you're going to get the same thing. So the DOM is going to then display all of these liquidity prices effectively. So you can see that that is a level 2 data issue. All right, let's have a look at equities. I'm not an core equities trader, but I do like to trade them towards the end of the day, so I always like to look at them. Oops. Okay, let's put this over here. All right, let's pull up ES. Like always, starting on a very large time frame, weekly chart. Just going to minimize this for now. All right, so currently located in a weekly supply area with lots of wicks. Now, the originating supply is a little bit higher. Let me change this to something that you can see a little bit better. Maybe yellow. There we go. Okay, so all of these wicks coming from the supply, that was strong sellers stepping into the market. We're kind of creeping up to that level now. And what typically that tends to do when you have such a big area of selling is that we're going to spend a little bit of time here. Not like, 100%, but a lot of the times it likes to spend a bit of time there, especially considering that the volume that was transacted at this level is pretty plentiful, right? There was a lot of volume that came through, and that gives time. That gives us time to sort of facilitate the trade in that area until the market participants decide to break out of it. That's the whole point of looking at supply and demand areas. So it's not just, oh, it's one area. It's contextual. All of it is very contextual. Daily chart, similarly, there's a supply right around here, and not surprisingly, we're kind of bouncing, barcoding up and down inside Friday's range. So nothing to see there. 4-hour chart. Little bit of a demand, localized demand here, but I wouldn't expect that to hold any significance because it doesn't have follow through, and it's more a result of a quieter day. So, we may actually slice through it all the way down to 55.40 area. And I mean, me being a forever contrarian, I would like to see, would like to see a sell-off again, some kind of sell-off. Because where we are right now, it's a little bit tricky. There is an area of low volume node from this big candle here. I believe that was that the CPI print? Is that a CPI candle? Can't quite remember, but if it is, that definitely remains the area to watch out for, because it was already reactive, right? Look at this little candle. Came right down to it, bounced off of it, went higher. But ultimately, Friday was very, very quiet. I did have a little long on late Friday, just kind of expecting a pop to the upside. But it just never came. Like, I literally closed it for break even after holding it for like 90 minutes, which was, very quiet considering it was like expiration day and a whole bunch of other things. But, sometimes that's how it goes. So we'll see whether this week can maybe make a move a little bit more. But again, there's nothing much on the calendar. I don't think there's Jackson Hole, but it's August, it's the end of August. Whether that's actually going to bring any sort of action, I'm very, very doubtful. And this is why I'm spending more time doing analysis rather than any kind of trading, because we want to turn to even more probabilities and higher probability trades rather than just randomly clicking buttons and just going, oh, it's a shit day. It's not a shit day. You need to get better. All right, 1 hour chart. Again, we have some very obvious highs and lows. So high at 55.94, just underneath that round number of 56. We have this pop lower at 55.37. So that's establishing the balance and the range for the foreseeable day, at least. So I wouldn't be getting involved away from these levels, looking for extremes, looking for prices to maybe stay in range. So, we'll see how the day begins. Obviously, some things might be shaken out when the cash session begins. But for now, everything is pretty range bound. One thing that might be useful is that we're trying to go a bit lower than Tokyo range. But I mean, that to me would be middle of the middle. It's not a great trade location unless you're looking for momentum trade, and I'm not. So that's the problem. Martin Vukovic says, when we see on time and sales on Bookmap sell order, can we know that somebody exited longer entry short? No, that is the information that we do not know. And therein lies the trickiness about using real-time order flows. So anytime you see a sell order, There is absolutely no way to find out whether somebody was exiting the existing position or initiating a new one. There's no way to find out. Okay, so again, useful to know that there are some people that are doing the selling, but how you're going to apply that knowledge is down to the contextual nature of the day and the level that you're looking at. So let's say we had an extended move down, and now we're hitting some average daily ranges. So the context behind that is that if you see long stepping in, is that it's probably going to be take profit moves from people who are selling on the way down, right? So let's say right now we have a bit of a move down on the 1 hour chart, and then this pop up. Well, I would argue that once we reach the edge of Asia, that some people decided to exit their positions. So these little pops upside would be more take profit moves. And whilst take profit moves can be significant, usually they're not that long lived, because it's not new positions initiating new trades. It's people who have sold on the way down bailing, right? So it's very contextual. Again, we can't know for sure, but it is one way to try and figure out whether somebody would be a buyer or a seller, right? And then if you are in a range bound day, and let's say price goes all the way up and then pops other people's stops, that will bring a potentially a new move through those top pickers, right? So they want to be short. They want to be short at the top, but it's a strong uptrend. So ES goes and runs through their stops, which is then like a springboard. So buy orders that have been executed in the opposite direction, right? So it works both ways, but it has to be contextual. So this is why it's important to identify the type of a day that you have. And granted, identifying a range-bound day is probably pretty difficult early on. That's why for a range-bound day, if you hear Hogue saying, we are in balance, in range, it's very likely that the better trade locations will come to us later in the day. That's why, because we need data. We need a confirmation that we are in balance. So right now, this is just a guess, right? We might be in balance. Why? Because we're opening inside ranges from the previous day. It's as simple as that. DM Trading says, where can I buy the CME subscription? On the Topstep website. So you go to Topstep and you go... actually, in recent times, like whenever I was getting a new combine, it would actually flash up, would you like level 2 data? But I think apart from that, like I bought this a year ago when I came back to Topstep. So it's a little bit difficult for me to remember how I bought that. But I think it's in the billing section. You should see like level 2 data somewhere. And, they are constantly refreshing the website and stuff and changing it. So, and because I already have it, I don't think that I will be able to. Hold on. Yeah, I'm not quite sure. I can't even remember whether I maybe did it through the funding team as well. But yeah, I remember that one of the times, like I said, I was getting the combine and it flashed up. But I know that support is struggling a little bit. However, if you can't find the level 2 data easily... Oh, hold on. So it just flashed up again, upgrade to level 2. So it might be like a prompt that they do, but let's look at the help center. Level 2 data. Oh, here we go. Okay. How do I upgrade to depth of market data? There we go. We learn something new every day. All right. So, manage market data subscription should be an area in your billing section. And then you say account type and then click on the 3 dots and it says upgrade data. So that's how you add it. So manage market data subscription in billing section, that's where it's going to be. All right, Brent Ellenberg says, what time frame do you trade equities? Well, what do you mean time frame? I mean time frame as in like what? Price action? Like it really depends on what I'm doing. Sometimes, actually, or most times, I'm not going to use a time frame. I use context on time frames. So, you look at stuff and everything, but when it comes to the actual entries, I typically take my entries on equities in particular from very, very small time frames, but I wouldn't really suggest anyone more novice doing that because it's prone to a lot of mistakes and a lot of kind of false signals before you learn exactly what it is you're looking for precisely. And then, I don't want to say to people, well, this is how I trade it, I'll definitely go on 1 minute. It works because it works for me, but it doesn't work necessarily for other people. When I'm picking my trades, unless I'm like completely off the mark, most of the time I can stay in that trade for like easily half an hour without being in any danger of the stop loss getting smacked. And that's because of the types of trade locations that I pick within the day type that we have. So yeah, if you are, so I would say that that's a loaded question, and it would be best for you to experiment for yourself. Again, we're not here as a signal service, we're here as an educational service, and one thing that I can tell you is that the best way you're going to find what works for you is by doing a whole bunch of experimenting, right? Get a practice account, get, a few set of systematic rule entries. But I would say that if you're depending on, let me ask you how long you've been trading, right? That should be the first question really here. So how long have you been trading, Brent? And are you already funded? So have you proven some competence? Have you been able to get some payouts? All of that will play into my answer. Verti says, why is the following week missing from the chart? Following week? Because we don't have the following week yet. So Brent, at 1 year trading, that's very new. So I would be very careful with sort of the quick decisions, because it's very likely that you're still developing your skills. I would probably stick to a 15-minute chart for now, right? Just to get rid of the fake signals that you're seeing, and to really make sure that there is enough trading information in order for you to actually make a good decision. If you're trading NQ, that's going to be a little bit hard because of the size of stops required. But I would suggest ES. It's much slower. And as somebody who's only traded for 1 year, it's very likely that the speed of thought processing might be a bit... let's just put it this way. You have people who like to ride bicycles to work. And then you have Olympic athletes that compete in cycling, right? Those two will have vastly different skills. Okay, so obviously the Olympic cyclists have been doing it for many, many years. They spend thousands of hours in practice. So they're going to be pretty different to your average person who cycles to work, right? Even though the person who cycles to work is probably quite fit, maybe they're even, pretty speedy, but they're not going to be at the level of the Olympic athlete. Why? Because they haven't worked enough on their skills. And this is the same thing. So you come into trading, you trade for 1 year. This is a skill that requires, many, many years to properly master for a lot of people. The only people who manage to master it relatively quickly are the ones who already have the brain processing power and speed via something else. This is why people have very good memory, surgeons, former athletes as well. We have Francis Green. He's a former athlete, pretty good trader, right? So you can see the parallels there. Why? Because he already has a strategic thinking from another skill in life that he did. Being a professional football player in England to a very, very high level, right? And that means you have to have strategy, you have to have speed of thinking, and you have to have skills to take advantage of those on the fly. So this is the same thing. Therefore, the time frame or no time frame rather than order flow that I might be using, that Nick for a tick might be using, 100 tick chart that Dakota might be using, it may not be suitable for you yet. Okay, that's why you need something that will allow you to make a good trading decision for your speed of thinking at the moment in this environment. And you will get better. But for now, I would say stick to the 15-minute chart patterns if that's the kind of trading you do. Because anything below that, you have to be super, super selective over which types of signals you will use to enter a trade. I know that the markets are fractal, but let's say, let me illustrate this way. When we take a pattern like a bearish engulfing, okay, we have one down here, and we have another one up here around this yellow rectangle that I drew. So both are bearish engulfings, right? And this is on a 1 hour chart. We can actually take both of those as reversal signals without a shred of a doubt. Sellers stepped in. Very simple way to explain what the price did and who won. Sellers won. But if you go down to 1 minute and you try to apply, let's say, the same bearish engulfing we're seeing here, and we try to do the same thing on a 1 minute, you're going to get a ton of fake out signals. Okay? So here's one, bearish engulfing, gets run through. This one, okay, so it does bring a bit of a sell-off. This one, bearish engulfing, doesn't do anything, smashes through it. This one, so the only ones that are actually valid are the ones that look like this. This is a 1 minute chart. This is a valid engulfing pattern on a 1 minute chart, right? Anything else is too weak for this time frame because 1 minute, it doesn't have enough trading information inside it. Okay? So there's a lot of fake signals, a lot of noise. Here's another one. And this one would have worked. So it's very patchy over which of the bearish engulfings will bring us the actual signal that we need. Okay? Lots of fake signals. So anything that's tiny on a small time frame, I'm not interested in that. I'm interested in decisive, strong candles on a 1 minute that effectively close immediately, not after a few candles falling away, but that immediately cause the price to go below the 9 EMA that I have plotted on this chart. Okay, so a lot of them won't be that. So here we go. This is one. Just one in this entire sample size that I'm looking at. One valid one. And even that one retraces a bit and then falls away. But then the same thing happens. Fall away, below 9 EMA. This one, patchy. The next one, good. So you have to be super, super selective. And when you're looking at these in real time, it's even more difficult because you're zoomed in and you don't really have a good reference point. So you'll be going, oh, this one's closing below 9 EMA. I'm going to go in. Well, no, because that's not even taking out like one trending candle behind it. It's like so small, right? So you have to, this is why I like to tell people to stick away from super tiny time frames and micro order flow, because you need context, and you need good context, and you need to know exactly what you're looking at before you start grappling with such small time frames. But that's just my opinion. Again, you know, you do you. But if you're not finding much success on low time frames, let's put it that way, go up a few time frames. Go up a couple time frames, go up to 15 minutes, go up to 30 minutes, and see whether you can maybe find context there and get better at trade locations. Squeeze says, Dee, do you know why they don't want to incorporate alarms in Topstep? Would that allow us to not stay on our charts while waiting to enter the areas and interest charts? Could you ask sometime? Well, you can ask them yourselves. I mean, I'm pretty sure they're working on alerts. It's not like, you can't have alerts, we want you to sit here. Like, they don't care how long you're going to sit at the chart, right? So I would say that they're still working, right? There we go. So it's planned. So what are you talking about? Like, yes, they are planning it. They're not like they don't want to do it. They want to do it, but guys, you have to understand that they have like thousands of wishes on there. You know, we want this, we want that. So they have to make a decision. You know, they're only a small team. They're not like a team of 1,000 developers. They have to make a decision what they're going to prioritize, right? And alerts, they might be important to you, but to be honest, for a lot of us, we sit down, we trade during the 90 minutes or whatever it is that we want to find setups for that particular time of day. Then we go. I don't need alerts. I mean, I use them on Ninja sometimes, but there's not that many times when I will use an alert. Let's put it that way. But if you want them, yes, they are working on it. It is planned. So don't, to say that they don't want to incorporate it, it's a bit of a strong word there. They will incorporate it. It just takes time. Okay, so some patience maybe. RSRS says, I have huge problems with CL trading. It destroyed my accounts. Could you give me some advice trading it? Well, I'm not in a too dissimilar boat than you, because we've had a huge decrease in crude oil ranges. That's causing problems for everyone. I've on my private account, I've actually just gone to trading DAX, and I've been only trading DAX for like 7 months now, because crude oil is not playing ball for me either. Not that I'm not profitable on crude oil, but I just find it very labor intensive to actually find a trade that will go for 70 ticks. So what I've done recently is to reduce my targets down to 35 to 40 ticks, and I've reduced my stop loss sizes from like 35, which used to be my default stop loss size, in light of the smaller ranges, down to 15 or 17 ticks. But the problem is our candles that we have are still 20 and 30 ticks, right? On a 15-minute, 30-minute charts. So that poses problems where you might get whipped out if your trade location is not absolutely spot on. And I actually caught myself still chasing 70 tick targets. So that needs to change. One thing that I can tell you is that crude oil has specific times of day when it moves and when it fails the auction. So typically after 3 p.m. my time, which is 9 a.m. Central, in the next sort of 90 minutes, it very frequently fails the auction. So it tries to go one way, and then it fails the move. Once it starts doing that, you have a pretty good chance of getting 30 to 40 ticks out of it in the next sort of 45 minutes to an hour. So try to use that as some sort of a orientation. Sometimes that move of the failed auction happens right into euro close. Crude oil is very technical time-wise, so if you just expect to sit down and, trade it at any point of the day, it's not like that. So you need to really go, okay, so I'm looking for 9 a.m. Central, between 9 a.m. Central to about New York lunchtime, let's say, so let's say 11 a.m. Central, to look for my setup for the reversal. And then if you find it, you take it. And I actually leave that trade sometimes to run all the way to half an hour before settlement, which is effectively holding it for 2.5 hours, But if I manage to get my 30, 40 ticks before then, I will take it. But yeah, I agree. Crude oil has been very challenging. One of the reasons why I've been hopping around different products and stuff that I wouldn't normally look at is because A, I don't have the axe yet on Topstep, and B, crude oil has massively reduced the range. So sometimes, I'm looking at it, I'm in a trade, and I'm like, is my internet on? It's so slow. And it's never been like that. Crude oil has always been very bouncy. You could expect 250 to 300 ticks on average. For 11 years, I've been seeing that, 11 years. And then during COVID, it went absolutely nuts, up to 600 and 700 ticks per day. And then for the last sort of two years or so, it kind of settled in a range of about 180 to 200 ticks. But last 8 months, we've had barely 115 ticks during NYMEX, and that poses a problem, right? So there's definitely been a reduction in ranges due to concerns over supply in the Middle East because of conflicts, geopolitical uncertainties over the elections, a whole bunch of other things. We had the president that rage quit, right? Biden quit. And a lot of stuff has happened to sort of minimize the interest of the companies that would normally move those markets, and to express their views as crude oil being this big risk instrument that it used to be. So that's definitely changed this year. I don't think it's going to stay like that forever. But for now, I'm very careful with when I'm trading crude oil, what stop losses I'm using on it, and what targets I'm using. So my old problem was to hold trades for too long. That was my big strength, but also my big weakness, right? If we're going to talk about, analyzing yourself and going into that introspection, seeing how we do have Brett Steenbarger on the 20th of August. So tomorrow, he's going to be on Topstep, taking a whole bunch of questions. So rather than, blaming things on crude oil, it's me not adjusting to the new market conditions and still clinging to the, being high on hopium that I'm still going to be hitting 70 and 100 tick targets on crude oil. I've done some statistical tests over the last few weeks, and I came up with some interesting numbers. One of those being that in any 90-minute period, crude oil was only moving between 31 up to 57 ticks at most. That's So seeing that, I was like, oh, okay, I need to modify. But at the same time, I also know that using super low stop losses is prone to difficulty because you will get whipped out. So attention to, attention to the stop loss sizes versus the targets that you're expecting and the time of day that you're expecting those to happen. That should be the primary thing for you. So it's not impossible, it's just aiming for small targets, not looking for momentums, quite the opposite, looking for failed auctions and failed moves from the edges of the ranges. And then when once in a blue moon you get the big move, so be it. Those currently happen at a rate of about 8% for NYMEX. They've been happening more frequently during London for some strange reason. But New York, in other words, NYMEX have lost their balls somewhere with crude oil, so I don't quite know what's happened there. But yeah, so we're gonna wait until they find their nuts. So yeah, that's all I have to say. Lazy Lion, I like your name. Would I keep the anchored VWAP from Friday's US Open on my ES chart and still respect it as a level if I trade ES now during the London session? I would say the overnight, overnight Globex Open might be an important thing. I'm not sure I would use it as a level, so let's just see roughly where that is. So overnight. There we go. Yeah, so I wouldn't use it as a level. I would use it more as a directional indicator. This is an out-of-hour session for ES. So rather than going, I'm going to use it as a level, VWAP is there more for momentum trades. And London, does it really do that many momentums statistically if we're looking at a 6-month sample size on ES during London? I would have to say no. Okay, it's very range-bound. It's very boring for the most part. So using other things like Tokyo high and low or Asia high and low as a directional indicator and or level, that would be a better thing for London trading. But VWAP, I mean, I would say it becomes more significant as we get into the overlap, and definitely very significant when we get into the main trading, especially, here's the caveat, especially if you can do another level around there. So I wouldn't trade VWAP on its own. I want to see confluence somewhere. Either with the edge of value, outer edge of value, or with something like, somebody is at my door, or with average daily or session range, or, something that you can kind of find confluence with, and then you'll be like, okay, this is a VWAP trade. But on its own, I find it a bit suspect as an entry price. It's a great target. So if you run a failed auction in ES and you want to run it as a target, that's great. So VWAP overnight right now is around 55.80. So here it is. So that's the overnight VWAP. And that would be a great target, right? Do I want to get involved in the middle of nowhere for a short? No. So just be careful how you use VWAP in which contextual form, because on a range-bound day, VWAP is just going to be run through. Okay, with that, the dogs are saying we're hungry and we want to go out. So enjoy the rest of the programming. Obviously, we have some new programming. We have Nick for a tick. I hope you tuned in last night. It was a great session with Nick. He runs his Globex Open at 4:55 p.m. on Sundays. That's Central Time. Then we have Dakota, who runs his slow markets, as always, at 7:30 p.m. Central. And we have Coach Jay. I think he's still doing at the buzzer at the same time. Yeah, so 3:15 p.m. Central. As soon as we close, you have Coach Jay to do a recap of what's happened. And obviously you have me for the London sessions at 3:30 a.m. Central Time, 9:30 a.m. London. That's it for today. Let's see what this week brings, but let's take it slow and steady, and don't click buttons just for the sake of clicking buttons. Make sure you have an understanding first. One of the reasons why I say that, we have Brett Steenbarger, that's his saying, don't look for trades, look for understanding before you take trades. I'm going to leave you with that. I'll see you tomorrow for another London session. In the meantime, enjoy the main segments and enjoy fast markets with the rest of the team. Thank you for joining me. I will see you tomorrow.